Hi, namaskaram, good morning, good afternoon, good evening, good night, wherever you're listening or whenever you're listening. So, today let's talk about how you can master the bearish neck candlestick pattern. So, in this thing, the neck candle, I think I spoke about Haramis and engulfing, bearish engulfing, and we'll talk about many other things. There are courses below. You can join the courses. You can join my consulting program if you really like. And there is a portfolio review also I do. There are multiple books I have written. You can go through them. Before getting into the examples, let's look at the disclaimer thing. Go through it, and then let's come to the what is candlestick. So Japanese candlesticks are basically used to understand the price movement of the underlying financial instrument. So there's an upper shadow, there's a lower shadow. Consider this as a bullish real body, green or white body. It opens here and closes above the open price. And for a bearish thing, it's black or black real bearish or black thing, real body where the close is below the open. So this is simple things we can discuss further in the more examples in the courses. So we will discuss the introductions in the 18th century or before that. So we'll go to the neckline thing. On line and in neckline, if you can see, this is exactly in the on line, this is in neckline. It moved little up here. Both are bearish signals. We can clearly say this is a bearish thing. So boom, it is a good time you enter here. This is almost is open equal to open, yeah, something you can see might be, yeah, this is not like close and highs are almost equal out here. The open might be different. So it's a 2-day continuous pattern thing. If you see here, the market should be in established downtrend. First candle should be long red thing. We'll talk about the examples further. You can read this thing. The second candle should be white in green color. So you can see this here. If you see here how exactly it is formed, it is not always green and red. It's not a fight between green and red. You can look at the pattern and the down more than a green and red, the necklines. I would suggest you look at what should I say? You look at the trend. Trend is the most important thing. If you see here, I'm just drawing you the trend line, which actually shows uh, how nice it is. How nice it is. The trend line. Maybe if I draw the straight trend line, the shapes I'll take the straight thing. If you take from here, how cool it is. See, it didn't cross above this. It didn't went above this. Once it broke in this one, see how far it is. So this is how you have to draw your trend lines. So I can show you this again, and then let's come back here, understand the bearish neck pattern thing, and then let's look at this one. So neckline has happened here, and then once the neckline has happened, almost kind of thing, then it has fallen. And then let's look at the other things, how you can identify the neckline and how you can make more and more money out of it, or more learn more and more what 99% don't do and 1% you are doing it. You are the champ. You are doing it. You are learning and identify recognize the initial candle, spot the second candle, identify the closing price. Important thing is I would definitely appreciate taking your time and learning. Taking your time and learning will really change the life. As I said many times, stock market is Rahu, and Rahu is also dealt. Rahu also prays to Goddess Saraswati. Goddess Saraswati is when you learn more and more things, you will lose less and less money, and the Goddess Lakshmi walks into your life. So let's see how things happen here. Two candlestick patterns, candlestick continuation, closing price, and confirmation signals of the bearish on neck, volume analysis. These are very, very important things you have to do. I can talk further in the trading when we talk in consulting or one-on-one. When you join the courses, we can talk about it. So the bearish cycle, you analyze the psychology behind the pattern, why it is happening. You can clearly see both are very deadly. The bulls and bears. So don't get slaughtered like pigs in the middle, as Jocks Wasser says in the Market Wizards. Trend identification, entry signals, target settings, established price targets based on the patterns, projected downside move. So another thing I would like to say is understand the trend. I have drawn a trend line there. Enter the signal where it comes. The signal comes, maybe I'll show you here. The signal is coming somewhere here, and then you can see somewhere, you can see here, and you can enter, consider this in a neckline. So those are very important target settings you should understand. Here also, like 5% ideal, kind of an ideal thing, but nobody knows how much you can really make out of it. Depends upon how well versed with your other indicators you are managing risk. Important thing in the markets is your psychology, and what is your target, and who is actually is your coach also does matter. How much engaging you are with the market, and how much tested is your research, and how much professional you are. So there are many things. There are some good selling content is there from the books presentation. You can connect with me on the down. So if there are subscriptions, if you really want to review your portfolio continuously, you can connect with me on the bottom. But let's go ahead, combining the indicator, confirmation signals, momentum indicators, and volume analysis. First thing you have to do is backtest, practice is progress. Do a quantitative analysis on this and do a real world example. So real world examples, practice at least 10 for today and maybe 20 for tomorrow, and then keep it in your trading journal, and that will help you, physical or non-physical, to help you in a very long time. Potential pitfall and limitations: overconfidence, context matters, and timing challenges. Don't do this in the last 1 or 2 minutes thing. There are important thing. Do not be an unusual trader to make big money. Do not be a kind of don't think from an unlimited point of view. Try to think don't have too much overconfidence. Stop losses are very, very important, because you don't know what is there in the market. So you have to be very, very time sensitive also when time challenges you. Conclusion: I think I just want to say there is one thing I have 1:10 thing. For every 1 point, 10 points reward. There is a course I think I paid $100,000, as I said, every time to multiple gurus, teachers, mentors, coaches. So I can help you out there. So rather than you go to the 100 people, I'm hub and spoke. I went to 100 people and I learned. So one hub can 100 teachers, 100 gurus. So I can help you out there. So thank you for joining this, and have a good time.